co-founders of the Taraxa project, and welcome to our ecosystem AMA, where we highlight the great ecosystem projects that are building on top of the Taraxa Layer 1. Today, we are talking to TrendsSpotter, part of our social AI ecosystem, as well as TradingStrategy, also part of our social AI ecosystem. And I'll let them tell you about what they're up to. Well, first of all, before we kind of get into the guests, this is actually a really special day for the Taraxa ecosystem. We're all very excited. The Ficus Root Bridge is being activated today as we speak, step by step. In fact, we actually just completed the first step of the activation, which is the activation of the Ficus root upgrade on the mainnet, which we deployed approximately a week ago. And the upgrade was successfully activated, and the first pillar block was successfully produced. So now the next step we're going to go is to deploy the Ficus root bridge contracts. So please stay with our Twitter channel, taraxa.io/Twitter, and get the play-by-play update throughout the day. All right, let's get into TrendsSpotter and TradingStrategy. So we have our first guest, Guy, and we have our second guest, Timu. So Guy, you want to tell us a little bit about TrendsSpotter? Or actually, why don't you introduce yourself, Guy? Yeah. You're muted, by the way.
Hi, can you hear me?
Yeah, I can hear you. Yeah.
Yeah, so I'm Guy. I've been working with Taraxa for now 2 years. And through the times I was working in Taraxa, started working through and looking through the echo data, and started seeing a lot of relationships between social data and kind of market dynamics, and hence how TrendsSpotter was born. An attempt to kind of aggregate all this data and make it super easy for people to come into our platform and understand what's going on and understand where the attention is, thereby helping them making better investment decisions. So a bit about TrendsSpotter. So at TrendsSpotter, we are basically an AI-driven data platform that aggregates data for people. So we are now covering quite far up from 15,000 groups and growing. And basically what we do is we collect all this data. We cleanse it because there's like a bunch of Telegram data that is not of high quality. So we cleanse all of that and find the relevant information and convert it into insights that we can show to people and help crypto investors. The reason why this is valuable is just because the information is really scattered. I can assume that a lot of us have tried to go into Telegram groups and to understand what's going on about a project, and it becomes really difficult to individually go into separate groups and get a good gauge of how the market is feeling about certain projects. Hence why I think TrendsSpotter is a great utility for people to use to cut through the noise and find the relevant messages.
Okay, great. Thank you for that introduction, Guy. Now we have the one of the co-founders of TradingStrategy. Can you tell us a little bit about yourself and TradingStrategy, Timu?
Yeah, hi everyone, and thanks, Stephen, for inviting me to the session. So I'm Timu, co-founder of TradingStrategy. I've been in the crypto markets for roughly 8 years now, and 3 years ago we started to develop TradingStrategy together with my co-founder, who is also a really experienced guy in the crypto segment overall, with over 10 years experience. And so as we've been in the market for quite some time, we noticed that there are many opportunities and sort of gaps in the market, especially in the decentralized environments and the self-custodial environments in terms of how the trading happens and how to automate trading. So that's where TradingStrategy was sort of established as an idea first, and then we started to work on the solution about 3 years ago. So TradingStrategy, it is a self-custodial algorithmic trading protocol which is focused purely on decentralized markets. And For those who are not familiar with the algorithmic trading concept, it refers to computerized trading where automated systems are buying and selling tradable assets on different kind of exchanges, and in our case also using some different kind of DeFi protocols. So the protocol enables creation of advanced and very sophisticated trading algorithms using Python as the algorithm programming language, which automatically execute trading directly on chain via decentralized exchanges like Uniswap and many others, and using some other DeFi protocols like, for example, Aave lending pools in it as well. So with trading strategy, whether you are a quant trader, kind of some kind of analyst, or a regular DeFi user, you don't need to understand blockchain technologies at all. So quant traders, they can come and basically create their trading algorithms using Python. That's all they need to know. Our protocol provides all the other functionality without any further integrations, and no need to connect your APIs to any exchanges and so on. And you can reach the opportunities in the DeFi and DEX markets. And for the regular DeFi users, they can utilize ready-made, very professional level trading algorithms just by connecting to the strategies with their crypto wallets. And the main idea here is that it provides very easy access to on-chain markets for all these different audiences, whether you are individual or trading firm or hedge fund or something else. And maybe last point here that we've done live trading with the protocol in private mode for about a year to really test and optimize the protocol and making sure that everything works nicely and smoothly. And recently we launched a few open strategies on our website, which can be accessed by regular DeFi users. So please go ahead and take a look at those, but happy to explain more during this session also.
Thank you very much, Timo, for that introduction. So before we dig into any details, I just want to underscore how big this is, right? So, so Guy, TrendsSpotter, let me see if I understand this correctly, right? So TrendsSpotter comes up with a trading strategy based on the social data, and then deploy that onto trading strategies platform to execute these strategies across a large number of decentralized exchanges automatically, right? And others can come in and participate, basically putting their money and see their money go up, right? Is that the understanding?
Yeah, yeah. In rough terms, that's the correct understanding.
Okay.
It's a great partnership right now because we've been providing this data, right? One of the products that we've put out is signals, but we understand that there's different types of users, namely, for example, passive users or active users, users that don't kind of want to just deposit and forget, and let our algos do the work. And I think that this is where this partnership really helps because it goes from kind of the signal provision to the execution and risk management all automatically using the Python framework. So yeah, that would be the correct understanding.
I mean, this sounds great. Just roughly, when can people expect that they can participate in this? I mean, when can someone start making money with you guys?
Yeah, well, we've been working on this collaboration now for some weeks now, and I believe that the first strategies from this collaboration will launch basically any minute now. So it can be kind of becoming visible on tradingstrategy.ai website, probably in a kind of day or within a few days, if not already. So we are just doing some final polishing here and there, and just making sure that everything works nicely, and hopefully you are able to access the strategy in no time.
All right, guys, you heard it here first. If you don't take anything else away from today's AMA, please take this away. In any minute, I guess, any day in the very, very near future, you're going to be able to deploy your assets onto TradingStrategy and have them automatically traded by TrendsSpotter's social AI generated signals in trading algorithm. And it's going to happen any day now. And please stick with us to find out when you can actually start leveraging social AI to your own financial profit. All right, great. Let's talk a little bit more about how these signals are generated. So how does you gave us a little bit of overview, but can you give us some examples, right, of the power of these social signals? Like how does it work and why is it so powerful? Yeah, maybe Guy can talk about that.
Yeah, sure. Yeah, so depending on how long you've been into crypto, there's been quite a bit of a shift on how things are kind of operating and how people investing. So back in 2017, I would say that we were people were very much investing in fundamentals and like trying to find the big tech that would be the next success. But over the past couple of years, the kind of meta's changed quite a bit, and I believe now we live very much in a crypto economy, and because of that is very interested to know where the attention is, right? If you know where the attention is, you can kind of position yourself before the trend happens. And this can be by inspecting particular coins and how many people are talking about in their respective sentiments, but how also they can relate to others. And because of that, yeah, it's very powerful to be able to have access to that data, but also very challenging to kind of put that data together, and that's what we've focused on doing. So what we do is we ingest on average millions, depending on the day, right? Like when the market is more active, people are messaging a lot more. We cleanse all of that. We remove spam because there's a bunch of spam in Telegram, and then find the information that people are talking about and where the attention is most focused. By having this information, understanding where the social dominance is in relation to certain narratives. You're able to much better position yourself to where that social dominance is, and kind of catch the majority of the runs of those particular projects. That's essentially how it works. Obviously, with in these strategies, the automated strategies that we're developing, TradingStrategy, there's a bunch of risk management, partial take profits, and loads of other kind of complex logic put into it to enable to have outsized returns without having the pain of being like 40-50% down on your strategy, which is I trust a lot of the listeners have been in that situation at one point or another. So we've done a lot of back tests using this use the social data, and we've had really extremely good results. Some strategies going up to like 10-20x the initial deposits, by simply following where the attention is, and that's basically the big vision of what TrendsSpotter is trying to achieve, is to enabling for people to have a lens into what's happening and spotting these trends really early on. But yeah, that's to summarize. That's why we think social data is so important, is because this kind of new meta that we're seeing here, and I think social tokens, or much better known as meme tokens or meme coins, are a very good example of that.
Okay, great. So Timo, I mean, someone like Guy with TrendsSpotter, can you kind of walk us through how a strategy provider would use your platform versus like an average investor would use your platform? Like, can you kind of walk us through step by step how these two different kind of people would interact with TradingStrategy?
Yeah, absolutely. Happy to do so. So yeah, those are our two main audiences. So the strategy developers, whoever knows how the markets work and knows how to create Python-based trading algorithms, and then the other part of our target audience is the people who want to use those ready-made trading algorithms and strategies. So keeping those two in mind, so let's walk first through what the strategy creators and those algorithm developers, how they use this. So first of all, the TradingStrategy runs on 5 different blockchains today. We have some other blockchain integrations available as well coming up soon. but it's already integrated to thousands of decentralized exchanges and some other DeFi protocols. And so through these integrations, you have really, really broad access to data and trading capabilities on chain. And currently, we provide access to over 2.5 million trading pairs on the on-chain markets through the protocol. So you can really analyze and research the market. What are the assets you want to focus on what chains and what kind of decentralized exchanges and so on. So you have very much flexibility in terms of what kind of strategies you want to create and what do you want to trade, whether it's a single trading pair or multiple assets or even entire portfolios of assets that algorithms are working on. And so what the protocol provides is, first of all, we have this market data. So we have historical data and live data feed, which we collect from the on-chain markets directly from the blockchain. So we convert all this transaction data for every token and trading pair to the familiar open, high, low, close price candles. So basically the typical price candles that you can see on the price charts. And we also provide volume and liquidity data from these markets. So then we have the strategy development, backtesting, and trade simulation environment where you can create these Python-based algorithms and backtest them against the real market data that we have collected. And then you can really optimize your strategy using that. And like in this partnership together with TrendsSpotter, we also enable this kind of third-party data and signals to come to the environment because it's a quite open Python environment, so you can easily integrate different kind of data sources also to your own strategies if you want to. And that's what we have brilliantly done together with Guy and the TrendsSpotter overall. And so having all these capabilities together, you can really kind of process different kind of scenarios with your trading algorithms and backtest and see what kind of ideas work and what kind of technical analysis or some statistical quant analysis you want to include there together with, for example, signals that TrendsSpotter is now getting from these different kind of social channels. And so once you have the strategy algorithm created and optimized and you are ready to launch it, then of course the trade execution becomes important. So we have the trade executor components, which are converting the trade orders from Python into on-chain trades. So that's something that we have really worked on for a long time and optimized that over the past couple of years. And so you don't need to integrate to any other kind of exchanges than through our built-in connections. And something which is really, really important, what we have included also here for strategy developers is the risk management features that are built in. Anybody who has used the decentralized exchanges or swapping some tokens and so on, you have realized that you don't have any risk management features in those, like stop losses or position size management or trading stop losses and that sort of things. But we have built in those into the protocol. So already when you are testing your strategies, you are able to utilize this kind of risk management features and see that what kind of parameter combinations work the best for you. So then when you have launched the strategy, then we have also the important aspect of how is the trading capital managed. And as I mentioned, one important feature of trading strategy is that it is self-custodial. So our team will never have access to your trading capital or money you are trading. So, for example, these kind of open strategies that are visible on our website and available for third parties to participate, each of these strategies, they have on-chain vaults. So vault smart contracts that are managing the trading capital directly on the blockchain. So we are using third-party asset management protocols, for example, Enzyme. Enzyme has been around since 2017, I believe, and they provide this kind of very sophisticated asset management vaults on chain, which are then managing the trading capital. And we have no access to your money. So it provides very nice security layer overall to the system. And so basically, when you as a user of these strategies, whether you have developed your own strategy or using someone else's strategy, you are depositing from your crypto wallet or from your custody service directly into the Vault smart contract for the strategy. And that way, and you can also withdraw money from the strategy whenever you want. So you are the only human in the whole process of this automated trading who can touch your money. And so then basically, once you have launched the strategy, then we have also very good incentives for the strategy developers. So of course, you can make kind of potentially profits with your trading when you are running the strategy, for example, in your proprietary and private environments. So that's one way to run it, that you don't need to open your strategies necessarily to anyone. But if you want to open your strategy to the third parties, so then these open strategies, they have very interesting sort of additional financial incentives for you. So when third parties have deposited money into your strategy and the strategy generates profits, so you are able to collect that kind of performance fees based on your strategy's profit generation capabilities. And that's one of the key elements that we have wanted to implement also to the trading strategy protocol overall, that we don't have any fixed fees for participants. So only when the strategies generate profit, then there's this profit share or performance fee model. But there is no fixed kind of management fees or any that kind of monthly subscription fees that many other trading environments have. So we wanted to align all the incentives across the different users. And so that was how the strategy developers can really benefit of this integrated environment, and we provide the full stack of capabilities in the single framework. And then when it comes to the normal DeFi users who just want to kind of enjoy the benefits of having really professional level trading algorithms available and this kind of automated strategies. So for them, it's very straightforward. They can come to, for example, our website, see some ready-made strategies, which are 100% transparent. You can see every single trade, every transaction, all the profits, all the losses of the strategy, and you have over 100 different data points describing how the strategies are performing. And you can see even every single transaction all the way down to the blockchain scanner, so you can really verify that how they are operating. You have access to see the vault, on-chain vault of the strategy, so you can see that where the trading capital is managed. And then through all these kind of different kind of performance kind of calculations and data points, you can choose the strategies of your choice. And the only thing you need to do when you want to participate in the strategies is to connect your crypto wallet on the website. There's a nice wizard which makes it very easy for you to connect your crypto wallet. And then the other thing you need to do is just to deposit money into these ready-made strategies, and that's it. You don't need to do anything else. You just let these automated strategies do trading on your behalf 24/7. And whenever you feel like taking your money out from the strategy, you just again connect your crypto wallet and withdraw money back, and that's it. The process is completed. So it's very straightforward, easy user onboarding. No need to do tons of paperwork to get your accounts up and running, but basically you can onboard yourself through your crypto wallet very, very nicely.
That sounds really amazing. I mean, I think I especially like the fact that user funds are not held centrally, right? They're actually being held by a decentralized vault. So that's really great. That's a really great security guarantee. I mean, this whole thing kind of reminds me of the copy trading introduced by eToro, which made them extremely famous. But this is like a decentralized copy trading almost, right? It's just basically the next evolutionary step. I think that this is going to be huge. So one thing that I think Timo mentioned, which I think is very important for people who might considering using strategies like the ones provided by TrendsSpotter is risk management. So trading strategy has a lot of tools and data provided to implement risk management strategies. We know from previous AMAs, Guy, that and you also mentioned today that there could be tremendous upsides, right, from trading on social signals, 10, 20, 30x. But I'm sure every single degen trader out there has been wrecked one point or another by trading random coins. And what kind of risk management strategies does TrendSpotter put in place to limit the downside?
Yeah, that's a very good question. Well, because of the trading strategy framework enables really us to do whatever we want, right? There is no logic that you can't really perform. And one of the things that I think everybody has felt pain when trading in these markets, especially like meme coins that are highly volatile, is the situation where you are in profits and then you kind of completely round trip your profits and potentially have losses in the end. And that's a very, very common thing, and it's a result of like having to do things manually, right? Like these volatile moves can happen during your sleep, can happen anytime during the day, and it's really hard to kind of capture and protect your capital because of that. Hence why having this automated is just such a key part of this part of the product that we're offering, because what we do is we always take profits partially, right? So we have 2 or 3 take profit points, and as soon as you're in profits, you start booking some of those profits in and move your stop losses accordingly. So at least if you are in profit at a certain point in time, you're very unlikely to lose money from there on because your new stop loss has been adjusted according to where price is. And another really cool feature that we've added is and it's something that is really powerful is trailing stop losses, right? And it's really good with meme coins because you just never really know where they're going to go. Something very classically kind of denominated in crypto is like the moon bag, right? So you'll take profits and you've had most of your money out of the table, but with trailing stop losses you can leave a portion of that remaining trade balance on and kind of move the stop loss according to the most recent highest price. And that is a really effective way to kind of work around and do this risk management, because not only you've already taken profits, but you're allowing the trade to continue as much as it can and kind of follow the uptrend up to the point where it's no longer a trend. So those are one of the main risk management features that we have, and this customizability that trading strategy offers in this framework really helps us to achieve those high returns with less downsides than you'd expect, especially when trading meme coins, which is one of the first strategies that we're deploying here. Just to add a final point, the reason why meme coins are so good for these kind of social strategies is that they're very much dependent. The price of meme coins is very much dependent on how much attention there is and how many people are talking about it. So being able to have access to that data gives you an edge that not everybody has, and TA in particular, meme coins does not necessarily have. So combining methods of technical analysis and social data provide really a more robust way of trading these social tokens, while keeping all these kind of risk management methods in place, fully automating these things and not leaving these hard decisions to the user, which is always like you're in X amount of profits. Do you take it here, or but you could continue? So you kind of don't want to FOMO. So having all these things automated, where it leaves to the user to not make mistakes and to have things to have your capital protected at all times, whether you're sleeping or you're out of the house or whatever is happening.
Okay, great. So you have some stop loss features built into the algorithm to make sure that the algorithm doesn't get too greedy and get itself caught on a downtrend. Another thing I think is very interesting for anyone who actually trades on decentralized exchanges is this idea of liquidity. And I think, Guy, you also mentioned that a lot of the assets that actually fit really well, that TrendsSpotter strategies work on really well, are meme coins. A lot of meme coins are trading on very, very thin liquidity on these dexes. I'm wondering how does your algorithm, as well as trading strategy as a platform, I mean, what do you guys do, or what do you guys think about people trading, and how do you limit like the losses or the potential losses of too much too large of a trading on too thin of a trading volume? I'm sure everyone trading DeFi are thinking about that. Maybe Timu, you can talk about that, since you guys are connected to over millions of trading pairs. I'm sure this is something you see every day.
Yeah, absolutely. Happy to discuss about that. And of course, it is true that as we have such a broad access to the market, and there are like loads and loads of these new coins that have launched in the recent few months. And of course, there are the large market cap coins like ETH and Bitcoins and others, but also then there are those really, really tiny new coins which have like $1,000 of liquidity in the market. So it's obvious that like some strategies are not able to operate in that kind of very low liquidity environments. But there's a large number of tokens and different kind of cryptocurrencies which fall into somewhere in between of those tiny tokens and then the large market cap tokens. So we talk about something called like a mid cap token. So there's a very broad base of those ones available for anybody who is seeking for high volatility in the market, but still having some liquidity and market depth available. So, but we are not really biased to any direction. So our protocol provides access to all of these things, and we just let the strategy developers to create the strategies the way they want them to work. But some of the functionality we provide through our kind of system and the data sets is that we have this liquidity data as well. So in depending on what kind of decentralized exchange you are running, there can be those more traditional like AMM type of pools, or there are those a little bit more newer ones like version 3 of Uniswap and some similar with the concentrated liquidity and other stuff. So we are calculating the TVL amount, basically means liquidity of those different trading pools and so on, to really understand that how much there's kind of those assets available. And strategy developers have access to this data. So it is possible to calculate all the time, for example, that how much would the price impact of your position size be. So if your strategy, for example, enters some low liquidity kind of a market, and it wants to buy something with say $10,000. So our data sets enable you to calculate that, okay, with $10,000, how much would you capture from this pool, and what are the price points? So kind of how much is available there at different price points. So you can see that how much would the price impact be with your position size, and then you can either have that kind of a dynamic model to then decide that, okay, do you enter positions if the price impact is too great, or do you just pull back from the position that you don't enter that at all if the price impact is too large. So you can automate this kind of thing and have some dynamic elements in your algorithm to then decide whether to enter or not. So all these kind of things are like readily available there, but of course it's up to the strategy developer to choose that what assets they want to trade. If you want to focus on large market cap coins, so then of course you can easily throw tens of thousands or hundreds of thousands of dollars in the single positions, and it doesn't move the market anywhere. But with those low liquidity coins, you really need to be careful that you don't sort of destroy the market overall with your large position size. But it is possible to check those as you go.
Okay, Guy. I think Timu just outlined how trading strategy offers strategy developers a variety of tools. to be able to measure the impact of trades or different trades with regards to liquidity and how much impact it would have on the prices within any given trading pair. How does TrendsSpotter's strategies take liquidity into account? And does that mean certain strategies have an overall capital kind of limitation? Like strategy one can only take up to $1 million, or strategy two can only, can you tell us a bit more about that?
Yeah, sure. Well, following a bit what Tim was saying, all this dynamic, all this data that they have in terms of the liquidity and the price impact that can have is all taken into account, right? So first of all, the first step is actually like choosing the pools in which you're going to use. So just from there, there's volume and liquidity availability that you can filter from, and we've kind of optimized for thresholds that would be interesting for you to be able to kind of prune out or filter out pools or projects that just have too low liquidity. And from the ones that do pass those filters, we've also optimized so the kind of position sizes dynamics in a way that they wouldn't affect the price. So even, for example, if there's $1 million in the strategy, and there's a particular opportunity that is good to take, but it would move the market with an X amount of position size. We downsize to the point in which it wouldn't move the market. So we have a dynamic position sizing according to these liquidity and volume thresholds, thereby adapting to doesn't matter the amount of liquidity that you have. Although, because, for example, the strategy that we're first deploying is on the Ethereum mainnet, the tokens there are actually very, very liquid. And because of that, these concerns are actually a bit more attenuated, and enabling us to actually take advantage of a lot of the volatile moves that these coins offer. But yeah, we essentially, to answer your question, we have a dynamic algorithm that will allocate different position sizing depending on liquidity, or simply just pass the opportunity if the liquidity is not strong enough for the token that we're kind of like iterating through.
And I have one more comment about this as well. When it comes to the size of the strategies in terms of the capital that they are operating. So at least for the time being, each of the strategies that are running on the protocol and the upcoming ones, at least in the near future, they will have some kind of a hard cap on how much capital can be poured into the strategies. So whether it's a maximum 1 million or 5 million or $10 million per strategy, those can be kind of changed. However, the main idea is that it doesn't make sense to run a strategy which is focused on these kind of low liquidity tokens, for example, and try to operate it with, let's say, $100 million. It just doesn't make sense because the market is so thin there. So, but then the other kind of strategy can have much kind of larger hard cap on the for the trading capital if the liquidity is good in the market. So we do have these kind of hard caps available just to make sure that it doesn't get sort of overexploited situation in the market, and then your strategy would sort of just destroy the prices of the assets it's trying to trade. So there are these kind of mechanisms that can help to keep the strategies operating nicely, and also the target markets to operate in a nice and smooth way.
This sounds great. So how? I mean, let's kind of pull up a little bit. Like, how did you two find each other, and how did you end up working together? Whoever wants to start first.
Yeah. So, well, Guy can maybe describe that. How did you find TradingStrategy? But so there was some initial, like once I think Guy reached out to us initially, but once we started to then chat online about the capabilities that we can provide, and based on Guy's needs, but quite quickly then we decided to meet in person because we happened to be in the same city at that point. And then we were able to have a face-to-face sort of workshop half day sit down and discuss about the capabilities and so on. And the trading strategy team, we are at the moment 8 people working on the protocol, and but especially now that we are still a fresh protocol ourselves, so we really want to provide that kind of close collaboration with our early users and make sure that they get everything up and running nicely. But yeah, it's been a very good pleasure to collaborate with Guy and the TrendsSpotter. But yeah, Guy, maybe you can describe how you discovered us.
Yeah, sure. I mean, it was through an intro, right? Talking to people and trying to kind of do a bit of outreach and understanding what protocols there I could partner up with. And when I first met Miko, and then Timo, it became abundantly clear that there was like a lot of synergies to do here. And yeah, that's basically how it started. I believe it's quite a while back. Maybe the first contact was made around May, and we've been working ever since in drafting up the vision of some of these strategies and understanding how we can work together in future and hook up the signal provision to kind of the whole suite of what trading strategy offers. Which enables us to do the automatic execution and assets under management using Enzyme.
Cool. So most of what people see in terms of copy trading or automated trading strategy executions, most of them probably operate on centralized exchanges. So, Guy, can you tell us a bit more about why you decided to focus more on decentralized exchange? Because I know TrendSpotter also has a few automated bots running on centralized exchanges as well. So what made you kind of focus more on decentralized exchanges, like more profits are to be made or something like that? And then Timo would love to also hear from you what made trading strategy focus on decentralized exchange and what are the the benefits of that. Yeah.
Sure. Yeah, I'll go first on that. Yeah, so we did, like you said, we've done a lot of tests, and centralized exchanges obviously offer very production ready APIs to trade a number of coins. But yeah, the key thing is a number of coins, and it doesn't have the same availability of all the coins that are out there, the new coins, the fresh coins, the coins that have essentially higher inefficiency in the markets compared to their counterparts in centralized exchanges. The reason why that's important is that you can exploit those inefficiencies and the correlation between social attention and price movements is much higher on the assets that are on chain versus the assets that are not on chain. So it's kind of a two-part thing. Is the first one is the vast number of availability of tokens out there. If you released a token last week, right, it'll most likely be on Uniswap or some decentralized exchange and not on Binance or KuCoin or whatever that may be. So that's another big reason. Second reason being the correlation between the social data and the price movements. And the third one is that the volatility in these tokens is much higher, enabling these strategies to actually extract a lot more outsized returns versus the counterpart of trading for something like Bitcoin and Ethereum. Bitcoin and Ethereum are quite mature assets compared to the majority of the assets out there, and as a consequence, because of the huge amount of liquidity that is needed to move things up or down, is much less susceptible to this social data that we're currently gathering.
Thanks, Guy. So yeah, if I expand on that a little bit. So yeah, one of the key reasons why many people are interested in trading strategy, in addition to the technical capabilities and the easy market access and so on, but it's exactly this what Guy highlighted here, that through decentralized markets you have access to such a vast amount of tradable assets that it's no centralized exchange can cope with. So basically, like, we have well over 2 million different tokens available in our data sets available for trading. Of course, there are lots of some tokens which were just created for some testing purposes, or they are some let's say meme coins that never really got any activities, and there's only a handful of transactions ever made. So of course nobody should be trading that kind of assets, but still there's tens of thousands of different kind of tokens which have like a reasonable amount of activities happening, and they can be traded one way or the other. So the vastness of the market access is just crazy good. So that's one of the incentives of trading outside of centralized exchanges, and really capture the volatility when you do it with the correct risk management in mind, and with suitable trading algorithms. But one of the key reasons why we wanted to focus on decentralized markets is that so my co-founder and I, Mikko and myself, we've been in the crypto markets for such a long time, and we have also burned our fingers with various centralized exchanges and some other centralized crypto solutions where we lost money, or there were some scam attempts or whatever. But they are basically tens of thousands of people have lost money on different kind of centralized exchange hacks or scams or whatever. FTX and Bazir X recently was hacked also, with over $200 million worth of money disappeared somewhere. And there are so many examples that we have experienced over the past two, three crypto market cycles together as co-founders. So that's one of the things that we noticed already early on many years ago, that we want to work on the decentralized and self-custodial solutions to really remove the counterparty risks of centralized exchanges kind of bringing to the market. And then there are other aspects also when it comes to the algorithmic trading, what kind of got us very excited. So as algorithmic trading in general, it really provides superior performance when it's done right. So it clearly outperforms human manual trading in nearly all cases. For example, you can get like a 30 to 80% returns on an annual basis, or even higher depending on what you're trading, with the limited drawdowns for your equity curve. So it's really exceeding the risk-free rates in the markets and many other aspects. And up to 75% of all trading on stock markets, bond and FX markets, for example, in Western countries, is already algorithmic. So it is like a really kind of established business model and the way of trading already in the traditional finance markets as well, and also in the centralized crypto markets. But there are a few different kind of issues that are very, very clear. So typically this kind of very sophisticated professional level automated algorithmic trading, it's only for large firms or people with really deep pockets, who have kind of resources and technical know-how to get those systems up and running. But in many cases, if you know kind of, for example, fund, which is providing this kind of algorithmic trading as a service, they only approve high net worth individuals as their customers. The regular people who want to come with their like crypto wallets or something like that, they don't typically get access to that kind of trading firms. So, and many times they are big banks or some other quant hedge funds which are able to do the really sophisticated algorithmic trading. Then the other aspect is also the you know that there are some trading bots and other stuff which may have also centralized system risks. But also in many cases, you need to do the technical integrations yourself using the API keys, and you do this and that. Or in the worst case, you start developing your trading automation from scratch, and you have over 50 steps of different kind of technical systems and integrations you need to get done before you are able to get your kind of automated trading systems up and running. And it's way, way too complicated for any regular user. So from that point of view, we really wanted to create now this kind of open platform, open protocol, where people can come easily to find those ready-made strategies, not only for high net worth individuals, but people from different kind of walks of life can come there, and they can really assess that what kind of strategies would be suitable for them. But it's not only the normal users, but equally well for the strategy developers. So in the traditional finance markets, you really needed to live in certain financial centers globally, that you had a good access to algorithmic trading kind of work opportunities in some major banking organizations and so on. But now we are able to provide through this kind of open protocol opportunities for both trader kind of DeFi users, and then also those algorithmic trading developers good market opportunities regardless where they live or what's their background. But yeah, those were some
Awesome.
of the key elements there.
Yeah, democratizing high finance, right? So basically, everyday people can get access to institutional grade trading strategies. I mean, that's
Yeah, those are definitely some of the key points, and also it's a financially like a huge deal. Like when we started to analyze the markets, so for example, last year, 2023, there was about 7 billion US dollars worth of management fees paid in quant hedge funds. So management fees are those typically 2% management fee for the capital that this kind of funds are charging for their clients, which is not that, because on top of that, they have also the performance fees. So they take, for example, 20% cut of the profit or the performance that they are able to produce. But typically they have like a 1.5% or 2% management fees just for managing the capital. So that alone, there's an estimate that it's about 7 billion US dollars worth last year alone. So there's lots of capital kind of inefficiencies and operational inefficiencies that those old kind of trading firm models have.
great. We're coming up on time. So both Guy and Timu, what are some parting remarks you would like our audience to hear? Maybe we start with Guy, or
Yeah, go ahead.
Because you cut off me. I couldn't hear the question.
what are some parting remarks? Because we're coming up on the hour. Yeah, what are some parting remarks you would like the audience to take
All
away?
right.
Yeah.
Yeah. So things that I would like people to take away is that TrendsSpotter is developing products to kind of cater for all types of users. So if you are someone that doesn't have the time to be constantly following crypto and being on top of everything, what we've been talking about today would be a great product for you, right? You'd be able to kind of deposit in a strategy that you like, leave and forget, and then our algorithms and framework will kind of do the rest and operate for you. Whenever you feel like it, whenever you want to take profits, you can just go and withdraw your money at any point in time in a non-custodial way. If you are more of an active trader and you do this every day and you want to know and get an edge on the markets, understand what the current narratives are, what are the new tokens that are coming over here, and understanding what people are talking about in Telegram, then we also offer products for that. We have an Explorer page on our product that enables you to look through what people are talking about, search for particular projects and understand how many people are talking about those projects. We have sentiment analysis coming up very, very, very soon. And we also have going to have some really cool features such as summarization of text, helping people to just kind of come in our platform and circulate through whatever assets you're looking for and get an automatically generated summary of what the project is about, what upcoming catalysts are there, and what the community engagement is like. So I think that will basically, for these active traders, it will augment the toolkits that they currently operate with, enabling them to add a lot more valuable information to decisions that they're currently doing. On top of that, we also have the social trading signals. So these are signals that come out every day. People can kind of monitor them, and we provide a confidence score that helps people gauge which signals are better than others with a filtering system. So people can kind of go into our platform, ask, I want to understand from Solana with a market cap below 20 million and a volume above X amounts, what are the kind of signals going off today? And choose and pick and choose, or even just investigate what these signals are about, what these projects are about, and dive deeper into this data. And finally, if you are someone that is a developer and just wants to build stuff, use this social data that we've kind of put together. Get in touch with us. We are building an API, and we will enable you to use our social scores and all the stuff that we are outputting to build cool stuff on top of TrendsSpotter. So that's the main points of things that we have going on right now. We will have these active automatically trading strategies coming up soon. We have a major rebrand and a complete new website. It's looking awesome, super professional, super slick and modern. That is most likely coming out either this week or next. So yeah, please stay tuned for that. And yeah, as I said, if there's any questions, join us on our Telegram and Discord. Come talk to us, come build with us, or simply just chat with us to understand how to use the product.
Thanks, Guy. And yes, from my point of view, first of all, wanted to express that we are really, really excited about this collaboration and partnership together with TrendsSpotter. It just highlights the synergies that we have amongst our kind of solutions and the teams complementing each other very nicely. Us from the trading systems point of view, and then TrendsSpotter from the social signals and how they are sort of captured from the market, and it's a great combination overall. And but when it comes to takeaways on why people should be interested in trading strategy, so first of all, if you are a normal DeFi user or crypto user, so it's definitely worth taking a look at the ready-made, really high-quality strategies that are available on the protocol, and choose whatever strategies that fit your own expectations and your kind of risk management criteria and so on. And they are self-custodial strategies. So this is a very big difference to you putting money into someone else's hands. In this case, your trading capital is on chain in your control at all times. So it's a very different setup. And while at the same time you are able to enjoy the benefits of really professional level trading strategies, algorithms, and you don't need to know how to do trading. Everything is implemented into the trading algorithm itself by someone else who knows how the market works. And also this sort of performance fee model that we have created is that basically whenever someone creates those trading algorithms, they don't get any benefit from other people unless their strategy generates profits. So there's all those incentives, they are very much aligned, and the goals are aligned between the strategy users and the strategy developer. So there's no fixed fees or transaction fees or that sort of things that someone is collecting, even if your money would be like generating losses. You don't need to worry about that. So it's a very nice environment and very fair kind of fee structures from that point of view. But in general, also for the strategy developers, I think the clear, unique selling points for our system is that you can access the hugely vast market opportunities without knowing these blockchain technologies. You don't need to start studying the smart contracts, what the blockchain, like how the blockchains operate or anything like that. Typically, anybody who is in the algorithmic trading or some quantitative analytics jobs, they already use Python as the programming language. So you can come with your Python skills. We have ready-made examples for strategies. You can modify them or create something from scratch. It's up to you. But with that Python knowledge, you are able to create your working trading algorithms and backtest and optimize them to your liking and launch them on the protocol. And we make it very smooth and straightforward, provide all the data and integrations you need, and just go for it. So I encourage anyone who is interested in this kind of space to really come and take a look, and also join our communication channels on Discord, for example. We are happy to help you with whatever questions you may have. And last point here, thank you, Stephen and Guy, for providing this opportunity to join you in this AMA session.
Okay, thank you, Timo, and thank you, Guy, for telling us about this great collaboration and how the average investor is able to get access to institutional grade trading strategies. This is an amazing collaboration. It's going live very soon. It's basically set and forget and watch your money grow type of strategy. And please, yeah, follow Taraxa, follow TrendsSpotter, follow TradingStrategy to get the latest update on when you can start participating and start trying out these great opportunities. So thank you guys very much, and there's going to be more updates from Taraxa obviously today, throughout the day, and tomorrow the deployment of the FICA's root bridge as well. So please keep keep following us for updates as well. Thank you. Bye, everyone.
Thank you so much. Bye-bye.
Thank you so much, guys. Talk to you next time.